Hey guys, Mike here again. Today I want to talk about Shinoken that's listed on the Tokyo Stock Exchange. They just released earnings, and I just wanted to do a quick update on this. In my portfolio video a few weeks ago, I talked a bit about my thesis on Shinoken, and it looks as though part of that's coming true now. In terms of their revenue restarting and actually accelerating quite quickly in the fourth quarter of 2021. But first, I'm going to just quickly talk about my thesis here. I like the quote from Peter Lynch, and he says, never invest in an idea you can't illustrate with a crayon. So what I'm going to try to do here is illustrate this investment thesis with my verbal crayon. The company right now is trading. The first one is that it's cheap. It's extremely cheap. It's trading at 6 times 2021 earnings. So that allows for a huge margin of safety just because it's so cheap already. Another part of the margin of safety is that the cash balance is just massive. I mean, right now, I've forgotten it off the top of my head, but I believe their cash balance is higher than the market cap. Yeah, they've got 40 billion in cash at the end of the year, and the market cap's about 34 billion. So if you take off all their property and their debt, and those cancel each other out, then basically you end up with more cash than the company is worth. So that's very good. A lot of people don't like that because they think, oh, it's a Japanese company, it's piling up cash. That could be a problem, but I would prefer a company with lots of cash because it just adds a huge cushion there. And like they say, cash is king, and cash can protect you against almost every problem. The other thing I like about them is they have a history of growing book value very quickly, over 15%, and I think it's closer to 20% over the last 10 years. Which is great, although there has been a slowdown in the last few years just because they've had a set of issues that are basically external problems. So part of my thesis is that these external problems will eventually be put in the rearview mirror, and I think we're almost at that point, if not at that point right now. So the two big problems they had was one in 2018, two of their competitors blew up, and they really hurt the reputation of the industry. And that caused sales to stagnate for a couple of years. And then as they were recovering from that, the industry was starting to get on its feet again, COVID hit, and Shinoken had to basically stop development for 12 months. So just quickly recap the company. So they develop properties, these sort of small apartment buildings that are on irregularly shaped lots, and they sell those to business people who then give them to Shinoken to property manage. So the people who buy the units don't usually take ownership of them. They then rent them out, and it acts as sort of a retirement vehicle where they can own property and increase their assets. And then what Shinoken does is they rent the apartments out. They have a 99% occupancy rate. So they're seen as a very high quality property management company because the rental rates are so high. On top of that, they also provide utilities to the property that they make a recurring income on. And then they have other parts of their business, which is a life care business. They do the general contracting for their developments. And they're also expanding overseas. Right now they're building units in, where is it? It's in Indonesia, that's where it is. And so that's growing slowly, but the margins are pretty good on that, and they're showing that they're able to grow overseas fairly successfully. So I would expect that to pick up at some point as they really get entrenched in Indonesia, and then eventually in other countries as well. So if we look at the quarter 4 results, one of the things that I said, or the main catalyst that I saw previous to the new year, was that after quarter 3, they said that their growth rate in quarter 4 is going to pick up dramatically. So they had about 12 months where they weren't building properties anymore, and they were just waiting for all the COVID restrictions to ease. And so in quarter 4, they started building again. They said they had this huge backlog of demand for their properties that they couldn't fulfill because they just weren't allowed to. And so if we look at the results from quarter 4, they're enormous. So this came true. So in quarter 4, they blew the results out of the water. They had more sales in quarter 4 for their real estate sales business than they had in the previous 9 months put together. So it was about 29 billion in sales. And as you can see, the profit for that segment jumped dramatically. Now, if we look at the overall company results, you can see that the year-over-year results actually turned positive because of these fourth quarter results. Whereas at the end of quarter 3, they were significantly negative versus 2020. So the fourth quarter has been a massive win for them. They've really turned the story around here. I think they will turn the story around here with the market. The market seems to have seen this the other day, pushing the price up by about 2%. But I suspect that this is going to change the narrative around the company as they go into 2022, and we get huge amounts of real estate activity, which they weren't able to do in the previous year. So if we look at the other segments here, they've shown some decent results in the other parts of the business too. Not huge growth rates overall, but encouraging, let's say. So then the most important other part of the business is the real estate services business, and this had sales that were up almost 12% over the year-over-year, which is quite good. These also have big profit margins at about 15%. So this is the part of the business I like to see growing, because this is recurring income. So if there's another real estate problem due to interest rates going up, or just some other unforeseen problem like that we've had for the last 3 or 4 years, this part of the business continues to tick over and sustain the company. And you can see that over the last 12 months before quarter 4, was this part of the business still continued to turn a profit and create a profitable company, so they can basically weather the storms that come up. Next part of the business is the general contractor business. This seems to move with the actual the development side, because they're building the units. Year over year for the quarter, they're up 16.6%. So that's obviously related to the big pickup in sales. And year over year, they're only 4%, because that includes the period where they were shut down for the previous 9 months. The energy business also looking very strong, up almost 10% year over year, and the segment profit is 688 million, which is that's over a 20% margin on that segment of the business. So we really like to see this, a growing part of the business with a good margin, and also this is recurring income as well. So again, another part of the business that's going to tick over no matter what happens to the real estate development. They also have a life care business. This one's up 4%. It's not a huge part of the company. So I'll just keep an eye on that as we go along. And then the last part is the overseas business, which is the Indonesia complexes that they've built. Now, the growth rate looks really good here. It's about 26%, and the margins are about 25%. So if we can get some significant growth here, this could really help over the long term. But it's very small right now, and so we'll just keep an eye on it to see if they ramp up growth. Their plans to grow are not that aggressive right now. I think they said they're going to start building their 3rd and 4th units shortly. So still only 4 units, which is a drop in the bucket for them. And I guess finally, one of the things I noticed here was they got approved by the Tokyo Stock Exchange for their REIT listing, or REIT. And so what this is going to do for them is this allows to turn a lot of their properties into cash. So they're not going to have such a big property asset on their balance sheet. It'll be transformed into cash, and they'll be able to use that either to increase their growth pipeline, or to pay back to shareholders, or maybe they just put it on the balance sheet and they end up with another 20 billion in cash. One of the things I did that I do like is that they look like their intention is to increase return to shareholders. So that's just shown here by the dividend payout ratio. So they're increasing that over time, and they're also looking at more share repurchases. So those are 2 other possible benefits that we could see here. All in all, I think the risk here looks very low at 6 times earnings plus the recurring revenue. And then on the upside, there's a whole bunch of ways to win here. So if we get a year where we see revenue growth pick up, I think the market will re-rate this company. And just on one topic, people hear when I read online and listen to them speak, there tends to be this idea that, well, the Japanese market may never you may never get an actual high PE ratio or a reasonable PE ratio on a stock. But I think that might not be actually accurate. I think the market is trading over 20, the Japanese market's trading over 20 PE. So if this company just gets a market rate, I mean, that's a triple right there. So that's one of the ways to win. You get some growth showing up again because COVID's in the rearview mirror, and then the market re-rates to even a market rate. The other way to win is they continue to grow the business, and maybe the PE ratio stays at 6, and you still end up with a company that looks like it's growing at about 15% a year. And obviously, the big upside would be if both of those happened. If you got a expansion of PE ratio and you get the growth in the underlying business, that's when you could really win on a stock like this. But that's it for now. I think I've missed a bunch of pieces with Shinoken, but I just wanted to do this as quickly as I could to get it out because the earnings just released yesterday, and I think I may pick up some more shares as Tokyo opens today, but we'll see. Anyway, have a great day, guys, and we'll see you in the next video.